Session 2, Basics of the Credit Score Breakdown. Many people are aware of the vital role that credit rating plays in their lives. However, understanding what goes into a credit score, the credit score breakdown, might be more difficult. There are several different scoring methods, but most lenders and banks rely on the FICO method that has been in existence since the 1980s when it was developed by the Fair Isaac Corporation. The three major credit bureaus, TransUnion, Experian, and Equifax, worked with the Fair Isaac to develop the FICO method. Your score may be any number from 300 to 850. The average American falls at about 690, which is deemed relatively fair credit. However, while this score should secure you a loan, it will not get you the very best interest rates on a loan. Following is the credit score breakdown. Payment history. The most significant chunk of your score, 35%, is derived from your payment history. This score is influenced by how well or not you pay your bills on time, how many have been sent to collection agencies, bankruptcies, tax liens, etc. Keep in mind that missing a payment is worse than making a late payment. Being late, or especially missing a mortgage payment, is more a numerous blow to your credit score than missing a credit card or utility payment. Outstanding debt. The amount of debt you have compared to the amount of credit you have or have not used accounts for 30% of your score. Try not to max your credit cards out. In fact, it is recommended that you only use 25 to 50% of the available credit. A way to balance this is to obtain more lines of credit and to not use them. However, do not apply for many credit cards all at the same time, as this is marked against you. If your credit is in good standing, apply for a reputable card every 6 months or so and save it for a rainy day. Credit duration. 15% of your credit score is based on how long you have established credit. This is common sense. The longer your credit history, the better your overall score will be. More data about your past leads to more accurate prediction of your future creditworthiness. The types of credit. Having several types of credit will boost your score if they are managed well. This counts for 10% of your overall rating. Too much activity. As mentioned earlier, opening new credit accounts all at once will negatively affect your score in the short term. It's also essential that you know that your score can be lowered for too many hard inquiries about your status. A hard inquiry is one that you have authorized a lender to perform. If you are inquiring about your own score, this will not count against you. Understanding what goes into this credit score breakdown is the first step in improving your score. A great way that you can achieve a good credit score is to never stop using credit. Be sure to use your credit cards as much as possible if you can pay for them. By doing so, credit card companies will know that you have a good history and will be paying and therefore give you a higher credit rating. My name is Ty. If you did not attend the last webinar, I encourage you to visit our website, mynewhomenj.com, and view the introduction and first session. NAAC received a community reinvestment grant from BB&T, now Truist, to provide this information to you. With that being said, I would like to introduce our guest speaker. Please welcome Roseanne Tizano. Rosie is the account representative of NAAC and is the branch market leader and vice president of Truist. She is wonderful and an outstanding support for our organizations that brings numerous years to aiding families and businesses to succeed. She is instrumental in NAAC's receipt of this grant. Thank you, Rosie.
This evening is going to cover budgeting during a crisis. Great. This presentation is about, as I mentioned, we do this program. It's called Bank on Your Success. It's a special edition that I'm presenting this evening, as I mentioned, and it's called Budgeting During a Crisis, which is a very critical topic as we're going through this pandemic this past year and a half. Next screen. Thank you, Ty. This is our bank's purpose, mission, and values, which we're SKIP. We live, breathe, and eat by this as BB&T, and part of it is, as Ty said, is that part of our mission is that we're giving back to our community and making sure that we provide resources to them in critical times. As I mentioned, we're all going through as a community. This is a special edition. While every individual situation is different, our goal this evening is to present you with crisis budgeting best practices, ideas on creating income streams, and information about resources available to you during this time. We encourage you to use these resources in your research to find the solutions and assistance that is necessary for your situation. So at the end of this presentation, there will be community links that you can use for reference. So the agenda this evening will be why budget in and out of a crisis, creating a crisis budget, identifying expenses, which that is money going out, identify income, money coming in, cost cutting, creative income creation, resources to help, and looking to the future. Why budget in and out of a crisis? That's a great question, and it's so critical, especially during this time. There's always need for planning, even in the midst of a crisis. Budgeting in and out of a crisis allows you to have a clear understanding of your financial picture. That clear understanding enables you to make informed decisions about money and to prioritize your spending and savings. It is our hope that the budgeting principles learned will continue with you into the future in good times and difficult times. Creating a crisis budget. Identify expenses and income. Budgeting when your income has stopped or is in jeopardy is different than regular budgeting. Instead of starting with your income and budgeting every dollar, determine the minimum needed to survive and then do all you can to find enough monthly income to cover those necessities. If you have any extra income in a month, save it for the future months. So down below, you'll see expenses again to repeat that money going out and income, money coming in. Step one is to be, and what we'll look at is to identify your expenses, which is the money going out. So this is a chart. It identifies expenses, fixed must-haves, which is our critical expenses that we all have. So you'll see on the side here on the left, must-have fixed. So of course, most important is your housing, your rent, your mortgage. Health insurance, super critical. Life insurance, car insurance, other insurances, other. So what you would do is chart your expenses, whether you create an Excel chart or however you might track your expenses. So you'll list those weekly, monthly, and yearly, and this will help you look at what your critical must-have expenses are. So identifying expenses variable must-haves. So the must-have variables are, as Ty spoke to, those other expenses: electricity, natural gas, your basic phone plan, nothing fancy, your groceries that are needed, gas for your car, childcare, super important, and necessary clothes, and anything else you feel that you would need to put in there. So again, you're going to look at that weekly, monthly, and yearly to stay on track and to stay in check. So the total must-have variable, then you'll look to the bottom when you add that all up. Okay, next screen. So these are identifying expenses, debt, and sanity. So the debt payments are, you see up top, expense type, weekly, monthly, yearly again. So your auto loan, super important. We need an auto loan. If you have one, if you're lucky enough to own your car outright, you need that to keep intact and on track with paying that. Student loans, some folks have, our credit cards, and as Ty spoke to, you want to keep them down to a minimum of 20–30%, use them properly, and then any other expenses you have. So again, you'll track that weekly, monthly, yearly. So down below, we'll see those less critical debt that you might want to look at and have, but really be very mindful of those debts. So that's video streaming service, treats, and other. I mean, we need that for our sanity because, you know, during these troubled times, we all have some stress. So these type of debts, minimal, and, you know, look at them and make sure you don't overdo it, that you want to keep track of that weekly, monthly, and yearly. So you can have some type of, you know, sanity debts as well to keep you kind of on the happy side. Next screen. So your total expenses will be, again, the expense type you'll see to the left. Total must have fixed expenses, total must have variable expenses, total debt, and then the total sanity expenses. So what you're going to do is pull those numbers in the previous chart, put them all in here, and then you're going to get your net of total expenses. Thank you, Ty. So cost cutting, we speak of that often. How can you lower your expenses? So what we're looking at here is your needs versus your wants. So on the left, your needs, or I'm looking to my left, what we need to do is trim necessary ones, scale back cell phone plan, grocery expenses, etc. Look for coupons to save extra money on the necessities. Incorporate bartering, which you can, where you can, so you can save on spending cash. So to barter is, you know, if you are a carpenter or, you know, you are a hair, you know, you do hair, you can, you know, do someone's hair for buying groceries or, you know, buying clothes if they own a boutique. So your wants, you would cut unnecessary spending, take inventory of automatic payments. That's super critical. You need to really journal those because, you know, they can get, you can forget them, just like you should journal your checks and ACHs and everything going through your checking accounts. You should keep track of those automatic payments, even considering stopping some of them so that you can manage every dollar, and track and log all of your automatic subscriptions, streaming service, games, etc. So down below, a tip. So the next slide is cost cutting. So how can you lower your expenses? Oh, that's fine. So the tip is check YouTube and other free information sources on how to scale back costs. There are many videos on cost saving things, recipes, whatever, to you know, cut costs to have a conscious lifestyle practices. Thank you. So cost cutting, how can you lower your expenses? Lower your cell phone plan to the most basic, least expensive plan. That makes sense. Get a less expensive car, or if you have two cars, get rid of one. Decrease your utilities to the most basic. Speak to your landlord or mortgage provider to see what payment relief is available. A lot of mortgage providers, banks, and lenders are offering those deferred payments. Just be careful about that if you try to apply for credit in the next 6 months. Lower your grocery bill by building healthy yet less expensive food and move to drinking water. What else is there? So cost to cut, things to trim, eliminate. So again, this is kind of a budget spreadsheet. So again, you're going to put in your mortgage, your insurance, utilities, emergency savings, cell phone, groceries, gas, clothes, entertainment and eating out, dates and outings, pet care, subscriptions, hobbies, cable TV, the gym, lessons, education, personal spending, gifts, retirement, contributions, which is super important. Try and always get that in, because as little bit as you contribute, and if your employer also contributes, that really adds up. miscellaneous. So you're going to put in your non-crisis and your crisis, your critical needs, not so critical, pull them all down, get your net total expenses, and this is how you're going to look at your budget to keep on track during this crisis. Deferred payments, we talked about that. So anything that you have on auto debit, or if you're deferring anything as well, as I mentioned, these are the deferred payments. So that's if your mortgage, car payment, you reach out to your lenders, your bankers, your mortgage brokers to see if they would defer anything, keep track of that. So some lenders offer borrowers deferred payments. This means that you may not be required to make the monthly payment. Instead, the amount due will be delayed until the end of your loan. It's important to record these payments. You defer so that you know what you are expected to still pay in the future. And again, I want to be remind you to be critical of this, or be mindful, I should say, because when we pull credit, which Ty spoke about as bankers and lenders, that does show up that they're deferred. So keep track of that. Thank you, Ty. So step 2 is to identify your income, money coming in. So identifying income, your regular income. So income is from your full-time job, part-time job, or other. So you're going to keep track of that weekly, monthly, and yearly, and then total that out. And then below, sometimes during a crisis, it can be difficult to find regular income. Some of us are laid off on unemployment. Don't give up. Keep looking for full or part-time work until you find it. People, including my company, are getting sign-on bonuses. So that's super important to know, and something to take advantage of in all areas of job requirements. In the meantime, there are many ways to find the income you need to cover your monthly necessities. Let's look at some of these ideas for generating income in other ways. So creative income creation, even though you have hit a rough patch, there is work to be found, as I was mentioning. Now's the time to hustle. Here are a few industries to look at. And I did hear this on the news. It's amazing. So think of the grocery stores. Think of Giant, Walmart, Uber, Lowe's. Shipping and delivery, Amazon, they are offering sign-on bonuses. I heard that on the news, and UPS. Online learning organizations and remote meeting companies like Zoom, Slack, and Microsoft Teams come to mind. Also reach out to your family and friends and think creatively on what do people need right now. For example, working families need childcare. Remember, there is no shame in taking a position that does not pay what you typically used to make, especially during a global pandemic. Brush up on that resume, make that tough phone call, and do what you can to get income rolling back in. Again, this is a spreadsheet chart to look at identifying income, that creative income. Again, as in the past slides, you should keep track of that so you can look at your total income coming in. The childcare, delivery services, cleaning services, grocery stores, if you're doing tutoring or other, that weekly, monthly, yearly, annual creative income, you get that total to add to your other income to keep track of. So you can also, if we can go back one, Ty, thank you. So we spoke about going into a barter type, this is selling possessions. Yes, I looked at this and I thought of my mother, true story. I know when she became a widow for the second time and she had to sell some of her possessions to make money. She sold a lot of her things, not a lot, but some jewelry and things. So you could sell a car, sell electronics, a yard sale. Oh my gosh, I'm driving around every day lately, weekends, and you see folks having yard sales can really bring in nice money. One people's junk is another person's treasure. So, and anything else you might have to sell, equipment, lawnmowers, landscaping, equipment, whatever that might be. So consider these things you are no longer using that others will be willing to purchase. Yard sales help, but you might even consider selling big ticket items like a second car to help cover your expenses. Cash isn't your only currency, barter. This is the slide. So again, To barter is an act of trading goods or services between two or more parties without the use of money or monetary medium such as a credit card. In essence, bartering involves the provision of one good or service by one party in return for another good or service from another party. So what are the skills or talents you have or someone else needs? What skill or talent does someone else offer that you need? Could be carpentry, whatever that might be. So cash isn't your only currency. Barter, great with kids. Babysitting and childcare are super high in demand as we as parents and families are home and our child are home. Are you a great cook? Do you sew? Are you skilled at fixing things? Handyman, yard work, plumbing, mechanic, etc. Again, so you're going to include that income to track it, weekly, monthly, yearly, regular income, creative income, and selling your possessions, and you'll get that total net number. Step 3, identifying your budget. Are you living within your means? We talk about that often. So budget deficit or a surplus. So you're going to then come up with your total expense number and your total income. So as lenders, when we lend money to our consumers, that's what we look at. What is your debt to income? Ty spoke about your credit. So lending is debt to income and credit. So your total expenses divided by your income is, are you in a budget deficit or of a surplus? As lenders during this critical crisis, we're going to look to that you're at least 40% your DTI. So divide those expenses versus your income. And I mean, 50% and under is pretty good. 50, 55, 53. I know we can still do mortgages. Thank you, Ty. Next screen. The resources. So this is through us, BB&T, now Truist. This is our financial wellness portal, bbnt.com at work. You don't have to be a client. You can go on to that website, and this is super cool. So this is our financial foundation, and it has tiles about everything that you would need to look at if you had any type of financial questions. Thank you. Next one. And then 5 million in counting, money and mindset with tools, tips, and inspiration to help people become financially confident. Again, this is just talks about our financial modulars, COVID-19 Help Center. We have this on our web page, and there's updates as if some folks are business owners about the Paycheck Protection Program, and just tells you a bit about payment relief with SBA, Truist, other banks. These are very helpful websites and information. So external resources, you can go to U.S. government, usa.gov/coronavirus. You can visit that website for detailed information on steps taken by the federal government to help community about travel, immigration, transportation, student loans, and financing. Center for Disease Control, that's super critical. We all want to keep up to date on that. Small Business Administration is SBA. They have some great programs out there for folks. So if you ever need any information about that, that's there for you as well. So no storm can last forever. We'll get through this together. I want to thank you for the time. Thank you, Ty. And I think this really blends nicely with what Ty spoke about. So if there's any questions and answers, we could save it towards the end in lieu of everyone's time. And I'm definitely here if you have any questions after.
Thank you, Rosie. Okay, so I know we got a lot to cover tonight. That just tells you that that BB&T, now Truist, is such a wonderful partner with our community. You know, I highly recommend them. They care about your finances enough to put all this stuff together and to teach you. Now we're going to go into credit repair. So I know people are, this was what was asked for, so we're going to go right into it. Credit repair secrets presented by NAAC. Credit repair. Whether bad credit is new to you or it's been dragging you down for years, this can be the year you turn things around. As long as you have the motivation, we can guide you through the process every step of the way. How long does credit information stay? Well, accounts you paid as agreed will be on 10 years. Bankruptcy is also 10 years. Any collections, judgments, late pays, or tax paid liens, 7 years. Unpaid tax liens will be indefinitely on your credit report. Let's use strategy over force. Your payment history counts most towards your credit score. However, it's only 35% of the overall count. Smart strategy can pick up the other 65% in the other areas and to give you an increased score. You can get new credit that will increase it 10%. The length of the credit would be 15%. Overall, differences in the credit that you have would be 10%. And the amount you owe is 30%. By juggling these different 65% categories, we can increase your score quite quickly. How is your credit? Well, you need to know what your credit score is, or it won't do you much good when it comes to your credit repair. What you need to know are the negative items that are affecting your credit score, and that means looking at your credit report. You can request your report from the annualcreditreport.com. They give you a free credit report annually. You get it from Equifax, Experian, and TransUnion, which are all three of the credit bureaus. Do I need to monitor? Well, if you are going to be actively involved in repairing your credit, you will want to track your results. Credit monitoring will not only provide you with the snapshots of improvements, but it can also alert you to potential problems quickly. Identify errors on your credit report. It's good to identify all the derogatory items and then mark and rank the items to dispute in this order: bankruptcies, foreclosures, repossessions, loan defaults, court judgments, collections, past due payments, late payments, and credit inquiries. And then mark whatever is less than 2 years old. This way we can determine what we need to fix quickly. Then after we determined in that order, we will write credit repair letters. As a part of this session, I will also give you the link so that you can download and use and fix these credit inquiry letters so that you can write to the bureaus and to the credit people. There are different types of dispute letters. There are verification dispute letters, method of verification, any violations of your FCRA rights, and an intent to litigate. There's also goodwill letters and pay for delete letters. You mail your credit repair letters. I would avoid online disputes. Send via certified mail. Get a return receipt. You give them 30 days to investigate and keep good records. Use some type of journal of when you mailed it. Reduce your credit utilization. For a time, I want you to pay down your credit card debt and do some income shifting strategies. Just your W-4 and then minimize expenses. And there's also debt elimination software which we can help you find. How do I create a new credit history? Well, taking care of the negatives on your credit report will only get you so far in the credit repair process. At some point, you are going to need new positive credit to boost your scores. Rebuild your credit. Add new credit history by using department store cards, secure credit cards, secured installment loans, credit builder loans, and then adding yourself as an authorized user to someone else's good credit history. Check credit mixtures, and then challenge your hard inquiries by writing the letters. Check all of your disputes, but be patient with the process. Don't give up. Exhaust the whole process with every letter available, and then add the statement to file. Consumer Financial Protection Bureau is also great to contact if you have any problems, and then using a credit attorney if all else fails. The final summation: rebuild credit while disputing derogatory items. You may not remove all the negatives, but you can pay your current debts on time. Credit improves over time, and you just keep monitoring. We will help you build your credit now. We have this proven formula. We have sample dispute letter templates for you to download. You can reestablish your credit scores and monitor them. You can do some income shifting strategies, and we have tools to do that. We can help you minimize your expenses with the tool. We have debt elimination tools, and we have investment calculators for you. As overwhelming as the credit repair process may seem, it is easier than it looks. It's also well worth whatever effort it takes to get your credit back on track. The sooner you start, the sooner it's done. So why not start now? Get started today.